The markets are reacting again to Iran headlines. Oil drops on the possibility of sanctions relief. Energy pricing shifts, and currencies begin to reprice almost immediately. This is where things get interesting. While this is fundamentally driven news, the impact on FX, particularly the Euro USD, is not about the headline itself. It's about how capital repositions around it. When oil moves lower on geopolitical developments, inflation expectations can soften. Dollar strength can pause or retrace. Risk sentiment can temporarily stabilize. But these moves are rarely clean. Instead, what we see in Euro USD is short-term dislocations. Volatility spikes around key levels. Liquidity sweeps near whole price zones. Overextensions followed by rapid normalization. This is exactly the type of environment where technical execution becomes critical, not to predict direction, but to respond to how the market absorbs the news. In recent sessions, Euro USD has shown expansion beyond volatility bands during headline release, quick reversals after initial positioning, and increased activity around key structural levels. These are not directional signals. These are inefficiencies created by capital reacting in real time. At Celtic Capital Group, this is where we operate. We don't trade the news. We trade the reaction to the news. Macro events, whether sanctions, energy policies, or geopolitical shifts, are not inputs for prediction. They are inputs for volatility, dislocation, and opportunity. As we move deeper into a tightening liquidity environment with elevated geopolitical sensitivities, these types of conditions are likely to become more frequent, which means the edge shifts away from being right and toward being positioned to execute with instability. Now, we'll continue to break down how we're approaching these environments throughout the week. If you're an allocator, a family office, a high net worth investor looking for FX markets through this lens, feel free to reach out.